You saw the Barron's cover.
Yes.
Why this bull market is basically done in a year and a half. We're asking all the market guests, do you agree with the premise that the bull market's over effectively in 18 months?
I don't think it's over in 18 months. I mean, look, we have a lot of political unrest, political turmoil, but let's focus back on, fundamentals. Markets, the economy is growing about 4%. Companies are coming in with really strong earnings, and we're in the biggest tech boom possibly in the history of our world.
It's true, but could that also be a negative? Because as Goldman Sachs put out a note last week that basically half of the S&P's gain in the last year has been about 5 stocks. Literally, Amazon and Netflix and Facebook are they're so big that they're literally the donkey pulling the entire market cart. Does that worry you at all that it's so narrow?
Think of the flip side of that. Companies are having positive earnings. PEs are very low. Everything's positive for the markets right now on all the other companies. Even though those companies have pulled the markets up, I think you're going to see the tide rise with
Is it
companies.
just being a cynical old newscaster? You say that things are so good, how much better can they get? That's kind of how it feels, though.
And people have also forgotten this tax bill, this tax cut, that's very positive for the economy. It's going to outweigh the tariff tax that we're seeing right now.
You think so?
I think so.
But it's a psychological thing as well, though, isn't it, Michael? I'm sure your clients call you and say, Mike, the president's tweeting out this. There's talk of a trade war on CNBC. I've made a bunch of money over the last 5 to 10 years with you. Why should I stay invested? Why not just go to cash and I'll sleep well at night?
That's a very good question. That happens.
Are you getting that question?
That happens very often.
Okay.
But it also happens on days when the market's down a little bit. But then on days when it's up, people forget about it. So it's very psychological. But I also think at the end of the day, fundamentals outweigh any
even with fundamentally higher interest rates? Because that seems to be the story. Trump has sort of even trumped the Fed, which is hard to believe. But the Fed is raising rates. We haven't been in a rising interest rate environment in basically 14 years.
Yeah. So let's look at the flip side. That is one of the scarier parts of this market, is rising rates. Also, the economy globally is very fragile. As you see what happened in Mexico this morning, you see what's happening in Germany right now. So those are two of the biggest risks in these markets. Two of the biggest risks are rising rates and geopolitical turmoil that turns into affecting companies fundamentally and how much money they can make.
But I'll flip it around, I guess, because you wouldn't think it, given all the red lately, but actually the NASDAQ and the S&P are still positive for the year.
Correct. And
is there any hope in that with all this stuff going on, the markets have been able to hold on? They're like the wobbly horse trying to cross the finish line,
It's true, and I know I keep beating this horse, but I'm surprised people don't
It's
look
still
at
running. I mean, for some stocks.
Earnings are very low right now. PEs are very low and earnings are very strong. Companies are making money. Who would have thought the economy was going to grow at 4% or close to 4% this year? Nobody. If you asked that 18 months ago, nobody would have thought that was going to happen.
Except for the president.
Except for the president himself.
He would have probably said, to point back to a tweet from 18 months ago, all right, a little optimistic view there despite all. I did my best to rattle you. You didn't get rattled, Michael.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.